So these are organizations that are established with the aim of not making the profit, but to offer certain key services to its members or the society. So a good example of these organizations, they include things like the clubs. We have the children's homes. And any other organization that is there, and its aim is not to make any profit. So the difference here, we are not going to prepare the income statement, but instead we are going to prepare what we call the income and expenditure statement, just to show the sources of income versus how that income was actually spent, how that income was spent. So the income versus the expenditures. The difference between the income and the expenditure will either be a deficit or a surplus. You are not going to have profit or loss because these organizations are not there to make profit or loss. So when the income exceeds the expenditures, we are going to have a surplus. When the income exceeds the expenditures, we are going to have a surplus. But when the expenditures exceed the income, we are going to have a deficit. So these ones, now they replace the profit or loss. They replace the profit or loss. That is one thing that we need to note. The other thing is that these organizations, they don't have capital, but instead they normally have what we call accumulated, they normally have what we call the accumulated fund. Accumulated fund. Accumulated fund is simply the same as the capital. It's the same as the capital. So what are the key differences that we are going to witness when it comes to the financial statements for a non-profit making organization? But they are going to prepare what we call the statement of financial position, and instead of now the cash book for the profit-making organization, here we are going to have what we call the receipt and payment. The receipt and the payment instead of the cash book. Instead of the cash book. Just a minute. I try to see. Just a minute. So for these particular organizations, we don't have the cash book, but we have the receipt and payments. The receipt and the payments. So the most important thing that we need now to understand about these organizations, one, it is how do they raise their finances? What are their sources of income? What are their sources of income? The main source of income to this particular organization is what we call the member subscriptions. The member subscriptions. Each and every year, especially for the clubs, I know you have come across this we call the members club, the golf clubs and things like that. Each and every year, the members are supposed to update their subscription. They are supposed to renew their membership by paying a subscription amount. That subscription amount that they pay on an annual basis becomes the main source of income to the non-profit making organization. But we have got other sources, the donations, the gate corrections. They normally organize for events whereby we have things like the entrance fee and all that. But the main source is one, the members' subscriptions. The members' subscription. And then you realize that when it comes to member subscription, we are going to have quite a number of activities that are going to be involved. Remember, if for example, we take a year like 2022, that is the year that we want to prepare the statement for. Remember, in that year, you are going to receive subscription money from members for different time periods. You will find that some members had not cleared their subscription for 2021, but they have paid in 2022. So here we are going to have a case whereby we have arrears at start. We can also have arrears at end. Remember, arrears is money not yet received, meaning that by the time we were doing the last month of 2021, this money had not been received, arrears had start. Some members had not paid their subscription for the year 2021, but they paid in 2022. This one, arrears at end, simply means that this year 2022, by the time we are closing it, some members have not cleared or updated their records for 2022. That is on the issue of accruals. On the same note, we can have prepayments whereby we are going to have prepaid at the start of the year and a prepayment at the end of the year. We can have prepaid at start and prepaid at end. What do we mean by prepaid? Prepaid simply means that we paid in excess, or some members paid in excess. So by the time we were starting this year, we have some members in the year 2021, they had paid excess in that year, meaning that that excess will be utilized in this year 2022. When we talk about prepayment at end, simply means that at the end of this year that we are referring to, the year 2022, some members have not updated their records. They have not updated their records. So that amount will be transferred to the next financial year. So a prepayment at end will simply mean that this year 2022, some members have paid excess. A prepayment is an excess amount paid before the due date. So at the end of this year, we have paid excess. Now, I want to ask a simple question here. Remember, member subscription is an income. It is an income to the non-profit making organization. And we know that incomes are supposed to be credited from the ledger accounts concepts. So if we come here and we prepare what we call a subscription account, which has got the credit side and the debit side, what will happen is this: the amount of money that we have received this year as subscription, remember, being an income, when you receive money, you debit bank or cash. When you receive any money in the business, you debit cash or bank, and then you credit where or the source of that money. So in simple terms, when we receive subscription from members, we shall debit bank and then credit the subscription account. Subscription account is an income account, so it is going to be credited. So we shall come here and record that money here as bank, a certain amount as given in the question. Then you are going to make an adjustment for these 4 items. Those 4 items must be adjusted. Either we credit or we debit. Now here, these 4 items, 2 of them are supposed to be on the credit, 2 of them are supposed to be on the debit. Arrears at start, arrears at end. Prepaid at start, prepaid at end. What you put on the credit, it is the amount that is meant for that year. In this case, we are referring to 2022. Between these 4, which amount were we supposed to receive this year? What we were supposed to receive in the year 2022 is what we put here. What was received in 2022, but it is not for 2022, we put it on the debit side. So let us now have an argument on these 4 items. Remember, arrears at the start of 2022 means that by the time we were starting 2022, this money had not been paid. So it simply means that that money was for 2021. Some members had not paid their subscription for 2021. That's why they have arrears by the time we are starting this year. So arrears at start, this is an arrear for the previous year. or that amount was supposed to be received in the previous year, so it is not for 2022. It should come here. We normally put it here as arrears at the start. You put it there. It is not for 2022. It has been received in this amount of money that we have credited here as bank, but that money has or was supposed to be received in the previous year. So it is right. Those members had arrears at the start of the year. What about arrears at the end of 2022? Arrears at the end of 2022, it simply means that by the time we are ending the year 2022, some members have not updated their subscriptions. So that is a subscription for this year. By the end of this year, the members have not updated their subscription accounts, so it is supposed to be here. Arrears at end. Then we come to prepayment. Remember, we have said prepayment occurs when excess money has been paid or received. In this case, it is received because it is income. So when we talk about prepaid at the start, remember it is at the start of 2022. Some members had paid excess. What does that mean? In the year 2021, we had some members who paid excess, meaning that they paid for 2021 and 2022. So by the time we were starting the year, that money has been received, but it was received in excess the previous year. It was received in excess the previous year. If it was received in excess the previous year, then that excess will be utilized this year. The excess will be for this year. So the excess, because it is going to be utilized for this year, anything for this year, we put it on the credit side. So we shall come here and write prepaid at the start of the year. Put it there. What about this one, prepaid at the end? Remember, it is end of 2022. By the end of 2022, we have a prepaid amount. That prepaid amount at the end of 2022 will be used in 2023. So it is not going to be utilized this financial year. If it is not going to be utilized in this financial year, then it is not for this financial year. We put it on the debit side as prepaid at the end. You put the amount here. Now the balancing figure is what we take as subscription or what will go to the income and expenditure. The balancing figure, this is like the balance carried down. You put it there and then your account will balance like that. Your account will balance like that. So these two arrears at the start, this one means that it is the balance for the previous year. So we were supposed to receive it in the previous year. So we put it here. Prepaid at end, we have received it this year, but it is in excess. So we shall use the excess next year. For last year and next year, they are not for this year. That's why they are on the debit side. Prepaid at the start means that it was prepaid by the end of the last year. So that prepayment of last year now becomes money for this year. So we put it here because it is going to be utilized for this year. Then arrears at end, it is what we were supposed to pay this year. By the end of this year, we have not paid or we have not received that money. So it is for this year we put here. And that's how we prepare a subscription account. It is very, very important for you to understand this because it can be given a question itself. You are given these balances and this amount, and then you are told to prepare a subscription account. You note that bank is going to be on the credit side of subscription, and then arrears at the start comes here, arrears at the end goes there. So prepaid at the start comes here, prepaid at the end comes here. And then this figure here at the middle, this one you compute, you balance. The total of this side minus the total of this two will give you that. That one will be what you take to the income and expenditure. Income and expenditure account. So there is a document that I shared with you. Yesterday evening. I have presented, just look at it. So I want to do maybe 2 questions and then it will be okay. The other sources of income to the non-profit making organization might include some trading activities within the organization. Like, for example, if it is these social clubs, the golf clubs and all that, we find that within the club, there is something like a bar. There is something like a restaurant. Those restaurants, they buy and sell goods and they make profit. So the profit from that trading activity within the non-profit making organization, the profit from there becomes part of the income. So, like in this case, we are given about an organization known as what? It is known as the Linda Social Club has prepared a receipt and payment. Remember, receipt and payment, I've told you, it is like the cash book for profit-making organization. Payment receipts and payment account for the year ended that 1st December 2021 as follows. So we are given the debit side will always be for the receipts, the credit side will be for the payment. So if you look at that, we have the balance put down, that is the opening. The subscription there simply means that what we received from members that year, that is what we are supposed to consider here as bank. And then on the credit side, that is the payment side. It simply means that we bought an equipment, we paid rent, we paid electricity, we bought refreshments for the bar, and then we have the closing balance. And then we are given the balances as at that 1st December for 2020 and 2021. So the balances as at that 1st December 2020 and as at that 1st December 2021. So you are given electricity in arrears, subscription in advance, subscription in arrears, equipment, and refreshment stock. And now you are told, you are also given the provision for doubtful debts. Now you are told for the year ended that first, you prepare the bar trading account. The bar trading account. So how do you prepare that one? That one is very simple. Very simple. You'll come here and you say, Linda Social Club bar trading account for the year ended. It is for the year ended that 1st December 2020. The same format, you will come here and do bar sales. Do the bar sales. We normally always start with the sales. Are we given the bar sales? Okay. I don't know how I copied that document, but on the debit side, can you be able to see the figure 325,000? On the debit side of the receipt and payment, that figure is not actually written anything. It is just 325,000. That is for the bar sales or money received from the bar sales, from the sale of refreshments at the bar. That 325, you come here and you put it here as the bar sales. Then you normally come here and say less cost of sales. Cost of sales, we normally start with the opening stock or opening inventory. If you look at the additional information there, there's somewhere we are told about refreshment stock. Refreshment stock as at that 1st December 2020 and as at that 1st December 2021. Refreshment stock, whereby we have that 1st December 2020 is 50,000. And then that 1st December 2021, it is 30,000. Hope you can be able to see that. That one for that 1st December 2020, it is for, this one is 2021. Like that. So that 1st December 2020, that 50,000 is like the opening stock. Remember, we are preparing for 2021. That 1st December 2020, remember the next day is 1st January 2021. That stock now becomes our opening stock, 50,000. The refreshment stock when we were starting the year was 50,000. And the purchases Remember, the cost of sales is opening stock plus purchases minus closing stock. It has never changed. So you go to the receipt and payment. You go to the receipt and payment on the credit side, whereby we are told refreshment for bar. Remember, that is a payment, meaning that we bought them, we purchased them. Those are the bar purchases, 108,000. 108,000. Then, if you add this one, it is going to be 158,000. This is the same as the cost of goods available for sale. Then you less closing stock. Then you less the closing stock. The same point whereby you have refreshment stock. That one for that past December 2021, 30,000. It is your closing stock. What do you get? This one will be equal to 128,000. If you less that, then that one becomes your cost of sales. This is your cost of sales. So sales minus cost of sales will give you the gross profit. Can somebody compute for me this sales minus cost of sales? Sorry?
197.
100 and okay. Yes. 197. Yes. That is the end. That is the end of the VAT trading. It is a very small one. You take the sales minus the cost of sales, you get that. Remember, this one is going to be our income. It is going to be our income in the income and expenditure account. This is an income. This is an income. That is done for Roman 1. Roman 2, even if we are not told, you must always prepare a subscription account, told or not told. So I want to adjust what we have here, so that we can now get the subscription for the year that we need to take to the income and expenditure. Let me adjust this one of mine. You go to the receipt and payment. On the receipt side, you will get the money that was received in the bank for that year, 1,120,000. That is what we received in the bank that year. Then we have prepaid at the start and arrears at the end here. Prepaid at the start. Look at the subscription in advance. In advance is what we mean by prepayment. A prepayment is money paid in advance. So prepaid in advance at the start is that 3,000. At the end, it comes here. Subscription at the end, it is 22,500. That is it. What about subscription in arrears? Sometimes they can tell owing, outstanding due. We are not given at the start. This one is not given, but we are given at the end 24,000. You come here, you put it there as that. Then the balancing figure, the total of this side, which will be how much? 33,000 plus 1,120,000 plus 24,000, 1,770,000, sorry, 1,177,000 should be our total on both sides. Then you minus 22,500. Get 1 million. The balance carried down. That is what we get to the income and expenditure. 1,154,500. So there is no need of writing this there. That is the end of our subscription account. Note this money, and this one will be our incomes. So what else are we supposed to do? What else are we supposed to do? Those are the adjustments. We can make them very fast. Anytime you are given an expense or an income, and then you are given the balances at the beginning and the balances at the end, to get the amount for the year. Amount payable or receivable in the year will be equal to amount paid or received. You know, you talk about receipt and payment, you add the closing figure, not figure but balance, you less the opening balance. You less the opening balance. What am I saying here? Like, for example, if you look at the additional information down there, the balances at the 31st December 2020 and 2021, there is electricity. What you are supposed to do for electricity so that you can find the amount that you are going to take to the income and expenditure for electricity, you take the amount that was paid in the income and expenditure, the payment side, the amount for electricity there is 32,000. Then that is the amount paid. You add, go down there now, the opening balance for electricity, 15,000. You add 15,000, not necessarily 15,000, you're supposed to add the closing part. Sorry, you're supposed to add the closing. The 15,000 is the opening. The closing is 12,000. Then you minus the 15,000 for that end of the period. You take the amount paid, you add the closing, you minus the opening. So that is what we have done. The amount paid, you get it from the receipt and payment. Then you add the closing balance, and then you minus the opening balance. So if you do that computation, what do you get? That's 2,000 plus 12,000 minus 15,000. I'm getting 29,000. 29,000. That is for electricity. Anything that requires an adjustment, subscription we have done. Then we have equipment. Equipment. For equipment, there we are looking for depreciation. Here we have the amount there, which is 6,000 in the receipt and payment. Receipt and payment, the equipment is 630. Then you add the closing balance. You add the closing balance, which is what? The closing balance is 770,000. Then you minus 210,000. Somebody to do the computation. What are you getting? Okay. Have you found it? 29,000.
1,190,000.
What is saying 29?
It is 1,190,000.
That one is a lot. We are looking for differentiation. Let me see. That one is a lot. That one is a lot. We cannot be that differentiation. So let me see. Differentiation will be equal to asset value at start add acquisition you minus the closing balance. Yeah, after this was correct for calculating the depreciation because we are not given any percentage yet. The asset value at the start of the period, it is what we have as balance at the 31st December 2020. The balance at the start of the year 2020, we had equipment worth to 10,000. Then during the year, on the payment side, there is an equipment that we acquired for 630,000. That one will give us the value of equipment that we had that year. Then you minus the closing value, which is 770,000. Correct, actually. This one will give us now the value of the depreciation. If we started with the equipment of 10, we added with the equipment of 630 value. So it simply means that what we started with plus what we added, it is going to give us the value of equipment that we have in hand at the end of the year. What we should have at the end of the year. And then we minus now the book value here. What we are supposed to have minus the book value will give us the value that equipment have depreciated. Let us see.
70,000.
7,000. Okay.
70.
Okay. You get that minus. Yes, you get 70,000. This is now the depreciation. Don't know. Yes, correct, Shira. Let us now do. I hope you can be able to see the farmost corner. The receipt and payment. This one is simple also. Once you have these figures, let us say reader social graph. This is the income and expenditure. Income and expenditure account for the year ended. That year, December 2021. Very simple. You come here and you note the income. What are the sources of income? Sorry. What are the sources of income? One was subscription. Subscription, you come and pick this figure that we had here. That figure, 1,154,000. What we got on the balancing figure in your subscription account. Then we have bar profit. The bar profit, we had it there. The gross profit was 197,000. It is another source of income. Then, do we have any other income here? On the income side, don't use the subscription the way it is. On the receipt and payment, you use the subscription balance in the subscription account. And that's why I told you this one is like a month for you to prepare, whether told or not. Then, I don't see any other income. We don't have actually. You add this one so that you can get the total income. You can get the total income. So this one will be 1,154,000 plus 197,000, 1,351,000. That is the total income. Then you come here and you say less expenditure. Less expenditures. The expenditures that we have in this business now, We start with what we have adjusted here. One is electricity. Electricity, the adjusted figure here is 29,000.
Mwalimu,
Somebody?
the income expenditure here is 1154,500.
1154. Oh, 500. Thank you. 1154, 500. So there is 500 here. Thank you for that. Subscription is 1154, 500. Then electricity, we take this figure that we have adjusted there. Then we come here and we say depreciation on equipment. Depreciation on equipment. The figure is 70,000. We have any other expenditure on the payment side? Yes, we have. We have rent on the receipt and payment. There is rent of 400,000. So what you need to note, the equipment we only get to the depreciation. The rent has not been adjusted, so we use the figure the way it is. Electricity, the figure has been adjusted, we use the adjusted figure. The refreshment to bar, you don't use it. That one was used in preparing the bar trading account. So these three are now the expenditures that we have there. So you have 29,000 plus 70,000 plus 400,000. It becomes to 499. So income minus expenditure, because the income is more than expenditure, we are going to realize the surplus. We are going to realize the surplus, which will be 1351,500 minus that. It gives me 852,500. 852,500. That is the surplus. And that is the end of that question. That is the surplus, and that is the end of that question. I know you have not understood the concept well. I want us to do one more question. I want us to go to question 3 first. And then maybe later on we shall go to question number 2. Question 3. Question 3. Now that you have an idea.
Mwalimu, before you move.
Sorry?
Before you move, you're moving too fast, but I wanted you to explain where you had written amount payable or receivable in the year. What exactly is that in the second column?
This one,
Yes.
This one is when you are adjusting, especially the expenses. When you are given, you know, the receipt and payment will give you the amount paid. And then down there, you might be given the balance at the beginning and the balance at the end. For you to be able to know the amount that was supposed to be paid for that particular expenditure this year only, you take the amount that has been paid or received. This one you get it from the receipt and payment. Then you add the closing balance. Then you subtract the opening balance. So you are given 2 years, 2021, 2020. The 2020 figure is there, opening balance. The figure for 2021 is there, closing balance. So you take the amount that was paid. This one you pick from the receipt and payment. This two you pick from the adjusted or the adjustments that were given down there. So the closing balance is for this year. That's why we add. The opening balance is for the previous year. That's why we deduct, so that we can get this amount for electricity. This is what we pay. But as you are paying this, 15,000, it is for last year. That's why we are addressing. And then by the end of this year, 12,000 has not been paid for this year. So we take the amount that was paid, we add 12,000 for this year that has not been paid, then we minus the 15,000 for last year. Because in this 52,000 is for last year, so it is not for this year. So we add what is for this year, which is the closing balance. We minus what is not for this year, which is for the previous year, so that we can get the total amount here for this year. Correct?
Okay,
Yes.
yes.
Aye. Go to question 3. Question number 3. It says that the following is the receipt and payment account for Huna Club for the year ended that 1st December 2017. There is a receipt and payment there. The receipt, we received the money from member subscription, from donations, and from assets. On the payment, we paid stationery, electricity, salaries and wages, rent, we bought a furniture, there is bar purchases that we paid, and the closing balance. Then we have the balances at the start and the balances at the end. 1st January to that 1st December 2017. Now you are told for the year ended that 1st December 2017, you prepare one, the subscription account. This is how it is going to be. We normally start with the bank, put it at the middle of the credit side. The bank, you take it from the receipt side of the receipt and payment account. You go to the receipt and payment account, the debit side, there is member subscription, 382,000. You put it there. Then we are supposed to have the prepaid at the start here, prepaid at the end. At the start comes here, at the end comes here. Arrears at the start, arrears, yes, arrears at the start, arrears at the end. So we have them. If you go to the balances, prepaid subscription, we don't have for the start, but we have for the end. So you can come here and say prepaid at the end. That one has been given as 30,000. Then accrued or arrears, we are given at the start and at the end. So you can have them arrears at the start. It is 60,000. At the end, we are given it is 10,000. Then those are what we have. The balancing figure is what we shall take to the income and expenditure.
Mwalimu, it's 60,100.
Oh, there you go. 60,100. Actually, they normally put it like that to confuse you because many people will not see that 100 including me. So you need to be careful on those figures. So what do we do now? We calculate this figure. Actually, we are preparing the subscription account with the sole aim of getting this figure so that we can take it to the income and expenditure. So our computation will be like this. And what was supposed to be received, 382,000. You had 10,000 supposed to be 392,000. So this side should also have 392,000. So what is the balance figure? We minus 9,100. 6,100 plus 30,000. That is 9,100. 392,000. You minus 90,100. You get 301,900. That figure is what we shall take to the income and expenditure. That is the end of the subscription account. Any question up to that point?
Mwalimu, I have a question.
Yes.
On the subscription account, the format has to be, it starts with arrears on the debit side, arrears, income and expenditure and prepared. You have to follow this format. You can't start like with the bank. Then You can't rearrange. It has to be.
I know nobody will
specific.
penalize you, but actually the procedure should be because you must bring the balances first.
Okay.
That nobody will penalize because you get the same answer as long as they are
Okay.
same side. It's only that I'm following it from the accountant point of view where you must start with the balance and then you receive the money. But nobody will penalize you even if the order is not that okay.
Thank you.
Okay, welcome. For the bar trading here, you come here and say una club.
Excuse that arrears of 10,000 at the end.
Sorry?
The arrears of 10,000.
Yes.
Should it be for this year or for?
It is for this year, but it has not been paid. You know, it is the area as we are doing the end of this year, they have not been paid, but it is for this year. That's why they are here. Is for this year, but not yet paid. They will be paid next year. So when we go to next year, they will come here. There will be arrears at the start for the next year. That's how. Are we together?
Sawa.
Yes, yes. Anything for this year, even this one, you know, this was supposed to be prepaid at the start, but they did not give us. If you are not given, don't bother writing it there. This one is for this year. It was received in excess last year, but we are supposed to utilize this year. So it is for this year. This is for this year, but not yet paid. It is carried forward to the next year. Okay. Una club. This is the bar trading account, bar trading account for the year. And then this is 31 December 2017. Always start with the balances. If it is the restaurant, you start with the sales, the restaurant sales. The sales are on the receipt side of the receipt and payment as 200 as they are captured there as a 210,000. Then you come here and you say less cost of sales. Opening inventory. The cost of sales is always opening stock plus purchases minus closing stock. In this case, the opening inventory, you just go to the addition, the balances down there. There is somewhere you are given bar stock. The one for 1st January, it is the opening 22,500. Add bar purchases. This one you will get from the payment side of the receipt and payment. The payment side of the receipt and payment. Bar purchases that 5,200. $35,200. If you add these two, they will give you what? 57,700. That is the cost of goods. The cost of goods are available. Sorry, there is a reflection somewhere. There is some reflection somewhere. But hope you can follow with me so that you can be able to understand as I speak. So the cost of goods available is this figure. And then now you come here and then you guess the closing inventory. The bar stock at the end of that period, that 8,300. If less that, you get your cost of sales. $57,700 minus 38,300. You get 19,400. Let me put here. Cost of sales. So what do? Don't know whether I'm going to. It's a very big inspection. Let me come here at the bottom, the cost of sales. It is 19,400. 19,400 you minus from the sales. Get to a 19,600. That is your gross profit. I don't know whether we have got any back expense. We don't have. You look at the payment side, you can find that salary to waiter, to bar waiter. You can rest it here as a back expense. But when you don't have this gross profit, we shall take it as income. The income and expenditure. Someone who is singing.
Beatrice, you can mute.
Okay.
Sorry.
Yes, the young one is singing for us. But there is no problem. So I think we have done the subscription here. Then we have done the bar trading. What is the next thing that we're supposed to do? The next thing that we're supposed to do is to prepare the income and expenditure account. But before that, do we have anything else that we need to adjust? It is only rent. If you look at the bottom there, we are given rent. That expense needs to be adjusted. The rent payable. The rent payable. We said you get to the figure that was paid. Go to the payment side, you'll get that the rent that was paid there was 240,000. You add the closing balance that you are given as the balances there, 20,000. Then you will minus nothing because there is no open balance there. Actually put that. So you realize that the rent payable was supposed to be 260,000. That is what we take as the rent payable amount in the expenditure. Once that is done, then it is very simple for you. Come here and prepare owner, club, income, and expenditure account for the year ended 31st December 2017. On the income part, we have the subscription. The member subscription. Take this figure. The balancing figure here, 301,900. Video 1900. We also have the bar profit. We got it here, 190,600. Once you have written those two, those are the ones that were requiring adjustment. Go to the receipt side of the receipt and payment. Go to the receipt side of the receipt and payment and locate whether we have got anything else that we received that is not related to subscription and back profit or back. You can realize that we have donations. We included them here. We have donations. The donations, they were 1,740,000. That one will give us the total income. That one will give us the total income. 301,900 plus 190,600 plus 1,740,000. We get total income is 232,500. Then you will come here and record the expenditure. Expenditures for the year. Expenditures for the year. We have adjusted the figure for rent. You can put here 260,000. Then you go to the payment side. Expenditures are those that were paid, but don't include any expense that is related to bar, because that one has been adjusted. So if you go to the payment side, we have the stationery. Because it was not supposed to be adjusted, we use the figure as it is, 15,000. We also have electricity. 42,000. We also have service and wages. 16,000. Use rent has already been captured. Furniture, we don't use the furniture. Remember, this is like the income and expenditure. We don't use the fixed asset. We only use the depreciation. And in this case, we are not given the basis of calculating the depreciation. That is furniture bought. We normally record here only the depreciation. That one, you don't use it. You don't use it. But if they had given us balances for the furniture down there, we could have used those balances to compute the depreciation for furniture. But they have not given us. So we cannot record furniture as a fixed asset as an expenditure. Here we only use the current expenditure. The current expenditure. So we add those expenditures. To 60,000 plus 15,000 plus 42,000 plus 16,000. 927,000. Those are total expenditures. So this minus this will give us the surplus. We shall get the surplus because the income is more than the expenditures. You subtract it from 22, 32, 500. You get the surplus is 1,305,500. That is the end of that question. That is simply the end of that question. So I want you to take it in consideration on how you prepare a subscription account, how you prepare either the bar or the restaurant trading account. Just that. Those figures there, the profit from the restaurant trading account becomes an income here. The subscription, you don't use the subscription when you are given it the way it is. You adjust it using the subscription account. And then if you are given the balances for the start and the end of some expenses, you make the adjustments as we have seen up there. So that is very key as far as the financial statements for non-profit making organizations is concerned. This one does not, it is not that benefit as the others. So what I'm going to do for question 2. Question 2, for the sake of time, I will do it in a video. I will do it in a video and then I'll share that video with you so that you can go through on how I've done it. So that now I can incorporate the part of the statement of financial position. But the statement of financial position, the format is exactly the same as the statement of financial position for the sole trader, exactly the same, exactly the same, exactly the same. So I'll do a video for you and then I'll share that video with you so that you can be able to see how we do it. So I want to stop there. I gave you some assignments to do on the theory parts that we are supposed to tackle. I think I indicated that we are going to do the presentations on 7th of next month. So prepare those slides, we do those presentations, and then I'm going to give my inputs. And then we can say that those areas are covered so that we focus on the remaining computation areas. We focus on the remaining computation areas. So I think with that. Okay, somebody here wants to copy the bar training.
Mwalimu, I have a question.
Yes.
For the previous question for Linda Social Club, what are we to do with the provision for doubtful debt? Is that an expenditure we were supposed to?
There's somewhere,
Sorry?
there's somewhere we had that.
Yes. That question, the one for Linda Social Club, the first one.
The first one, there was that one. It's like we did an omission somewhere there.
Yes.
Let me look at it again. The first one. Oh, provision for doubtful debts. It was a decrease. It was a decrease if you compare the amount at the start and the amount at the end. The amount at the start was 23,000. The amount at the end was 12,000. So that decrease, we are supposed to actually consider it as an income. The decrease only. We never considered that. So 23,000 minus 12,000, that is 11,000. Provision for 11,000. So that 11,000, we include it there as an income. You write there decrease in allowance for doubtful debts or decrease in provision for doubtful debts 11,000, so that it can be part of the income. It can be part of the income. If I never saw that, then I will do for you the question 2. That will be the end. Remember, accounting is all about entries. It is not about the exact answer. Even if it is good you get the exact answer, make sure that you master the formats. You master the formats, then you post as many correct entries as possible. You will get a very good score. We can end there, Cindy. Anybody with a question? If there is none, let us stop there kindly. We meet on Sunday evening. Sunday evening, we do accounting for inventory, and that will be all. So, goodbye.
Goodbye, Mwalimu. Thank you so much.
Thank you, Mwalimu. Bye bye.
Mwalimu.
Bye.
Bye, good day.